I was saying I was hoping it wasn't me. Like I hit the next slide button and everything went away. I was like, wait, I hope that wasn't me that did that.
If you all are to our participants, thank you so much for returning. If you are joining and you had a comment in the chat, please go ahead and put it in the Q&A. And we don't know what happened, but a technical glitch, but we are getting it back up and going. And so thank you for coming back with us. And so we'll, Miss Elliott will start speaking in just about 10 or 15 seconds. All right, Miss Elliott, ready when you are.
Okay, I'll take one sip of water. There we go. All right, I'm back. So now we'll talk about loan deferment versus forbearance. And I think this is a really important conversation because sometimes people use these words interchangeably, but they are distinctly different. So one, loan deferment, typically that happens when you graduate. You get typically 6 months after you graduate before you need to start making student loan payments. And also while you're in school. So when loans are deferred, it does not accrue interest. It applies while you're in school. And then different types of loans have different deferment types. Now, forbearance is different. And forbearance is what people usually request when they're out of school and you're facing a financial hardship. So many people, you know, we're in a recession right now. And if you lose your job and you're trying to manage your household with a fixed amount of money, perhaps from unemployment or other sources, you're trying to find ways to minimize your monthly payments, and forbearance is one of them. But one of the downsides of forbearance is, yes, payments are on hold, but even though payments are on hold, interest is going to continue to accrue on that loan. And because that interest is accruing on that loan while you're not making a payment, it just continues to roll over. And so in the long run, you will pay more. The amount of your loan will increase because it's months or up to a year typically of no payments, but interest continuing to accrue. And typically forbearance does not last more than 12 months at a time. Most loan providers will ask, like, what's the specific reason? Why do you need forbearance? And then you can continue to request, you know, additional levels of forbearance based upon the financial hardship that is presented. But there are benefits to both in the sense of that it does put a hold on payments, and applying for deferment or forbearance has no impact on your credit. And that's important, is that if for some reason you do have a financial hardship, you want to communicate with your loan provider. You do not want to suffer in silence, because if you do not make any payments on your student loan, it will adversely impact your credit. It will reduce your credit score. It stays in your credit for a number of years, and it impacts your ability to do things like purchase a home or buy a car or get a credit card. So if you are ever experiencing a financial hardship, you do want to communicate with the loan provider. And as an advisor, I will say a forbearance is better than, even though interest is accruing, a forbearance is better than no communication at all, because it has no impact on your credit and it minimizes that financial impact or that financial hit. And so people often ask, well, how do I pay off my loans more quickly? How do I pay down student loan debt? So there are 6 ways that we talk through this. One is pay more than the minimum each month, if you can. So kind of like when you think about credit cards, you think about other debt that you have, you can pay it off more quickly if you can do so, if you can pay more than the minimum amount. The second is make biweekly payments instead of monthly payments. So like, here's an example, like, let's say your student loan payments are $222 a month. Instead of, you'll pay over that 10 years, $6,645 in interest. But if you move it to biweekly, and when you move to biweekly, you're reducing the amount of accrued interest. That's the benefit of making biweekly payments. So making a payment of $111 every 2 weeks, the total interest paid is $5,975. And you can actually reduce the number of years by 1 year just by, by paying biweekly instead of paying monthly. So that's a really quick and easy way to be able to pay down your student loans more quickly. Next is reconsider your repayment plan. So one of the things is, talking to the provider, understanding your structure of the loan. One of the things we talk about is like loan consolidation, particularly, in different environments where interest rates are declining, not increasing. Sometimes refinancing your loans to providers like SoFi is one of them. They're pretty well known. You can actually reduce the level of interest expense, and you can get your repayment plan down a little bit lower. Search for found money. And what I mean by search for found money, well, one of the new things now is employers are offering student loan assistance. One of my former companies now gives employees about $200 a month as an employee benefit to pay down their student loans. So when you're looking for opportunities, I know many people just strictly look at the compensation, the bonus, any stock options, things like that. But if you have student loans, to really make an apples to apples comparison of looking at one company versus another and their compensation package, ask a question about their employee benefits. Because if their employee benefit does give you money towards your student loans, that's additional compensation you have to pay down your student loans even more quickly than you thought. So always have that. Actually, right now, it's like for many people, open enrollment season, many companies are sending out an overview of your employee benefits. So it's a good time to review to make sure you're not missing out on something that could help you pay down your debt more quickly. The next is using windfalls. And what do I mean by windfalls? So there are times over the course of the year where you have a higher level of cash flow, right? So many companies pay year-end bonuses. So having a commitment to saying, I'll take 10% or 20% of my bonus every single year, and I'll use it to pay down my student loan debt, and make it a part of your plan. Not letting things like lifestyle creep or getting additional money to say, well, maybe I'll buy that new purse or those new shoes. Making a commitment to yourself that I want to pay my student loan debt more quickly, and I want to be able, and I will forego some immediate gratification, some goods to be able to be more financially independent and financially free, and have that student loan debt gone. The second windfall event is tax season. If you find yourself getting a refund, we consider refunds in a way like found money, in the sense, or money that you may not have been anticipating. And so it doesn't make a big difference or impact on your monthly expense budget, because you typically don't factor your tax refund in that. But taking your tax refund and paying down your student loan, or taking a portion of that and paying down your student loan. Or if you have any inheritances, or any money that you're not really expecting, any money that's not part of your monthly budget, think about using that to pay down your student loan debt. I also have clients that have side hustles, right? And that side hustle is strictly for paying down debt. and many of them is student loan debt. So I have a client that she's a notary part-time and uses, taking additional money from being a notary, or if you're someone that helps to build websites, or you have any type of side hustle in this gig economy, being able to specify that all the money I earn from this activity, I'm going to use to pay down my student loan debt is definitely beneficial. And then also research refinancing options, or options that can reduce the amount of your payments. So one of the things that was brought up earlier is public student loan forgiveness, right? Unfortunately, that window has passed, but perhaps if you're someone who did have time, previously working for the federal government, the state government, or working for a nonprofit organization, and you have hours built up, perhaps, if you find that amount of your payments to be so arduous, perhaps going back to the federal government, to the state, to a not-for-profit, and being able to have that credit of time working in the public space, to have that credit to pay off your loan. So just as a reminder, for public student loan forgiveness, you have to make 120 qualifying payments and be there for basically 10 years to qualify for student loan forgiveness. So after 10 years of making those payments, or if you're someone who's on an income-driven based repayment plan, at the end of that period, your loans are forgiven. And so if you feel that perhaps maybe taking a small pay cut, or moving to a, public or not-for-profit organization could be beneficial, that's definitely one way to think about using that to pay down your student loan debt more quickly. So now we'll get to the heart of the conversation, which is the Biden student loan debt relief. And so I'll go over the parameters. So first, the student loan forgiveness is based upon your income. So, and they're using the 2020 or the 2021 tax return. And the reason they're giving you the option of both is because sometimes there are one-time events that are not continuous that can impact your the ability to be able to take advantage of the student loan debt relief. So if you are single, your income must be less than $125,000 in either 2020 or 2021. The line number they're looking at, it's your adjusted gross income, and it's line number 11 on your 1040 tax return. So there's there's line 1 that's wages, there's total taxable income. It can be difficult to navigate which number. It's line 11 on the 1040 is what they're referring to when they say looking at income qualification. Now, again, it's $125,000 if you're single. If you're married, it's $250,000. If you're head of household, it's $250,000. If you are a qualifying widower, it's $250,000. And a qualifying widower means is that you were married, your spouse passed away, you have a dependent child, you can now have still a more tax preferential filing status. So if you're single or married filing separate, it's $125,000. If you're married filing joint, head of household, or a qualifying widower, it's $250,000 is that income threshold for either your 2020 or 2021. It doesn't have to be both, but it's either or is how the student loan debt relief program works. The loan relief, it's based upon whether you, it's $10,000 for all if you meet that income limitation, or it's $20,000 forgiven for Pell Grant recipients. Now, Pell Grant recipients tend to be individuals who are, it was like a student-based program based upon need. You don't have to research and look to see if you do qualify for the Pell Grant. When you do the form, and it's actually a really simple form, the government will look back at your record and see whether you qualify for the $10,000 or $20,000 by seeing if you were a recipient of the Pell Grant at a certain period of time. So that's one aspect of it. The second aspect of it is the new income-driven repayment plan. So lower payments and shorten forgiveness periods and 100% interest subsidies. So what do I mean? So typically the income-based repayment plan, you typically paid 10% of earnings in excess of $33,000 a year, which is the poverty line. Under this new income-based repayment plan, it goes from 10% down to 5%. So basically, it's increasing the number of people who, it's basically decreasing the amount of your monthly payment plan. Also, there's shorter forgiveness periods. So based upon, your number of payments that are made over 20 years or over 10 years, if you're in public student loan forgiveness, you can actually pay less over a longer, you can actually have shorter payment periods based upon your income. And then for certain individuals, they will also offer 100% interest subsidies. So going back to what we mentioned before, the Department of Education is actually paying your student loan interest. And so that is something that, of course, if interest is not accruing and adding to your principal, you will be able to have your payments really hit the core amount of your loan and pay your loan off much more quickly. One of the things that's happening now is if you apply for student loan forgiveness, there is that process of, they'll be able to see and look, are you part of an income-based repayment plan? And they'll ask to refresh your income to see what your new payment will be based upon this lower 5% amount. This is what Ms. Reyes, I believe, mentioned earlier. The public service loan forgiveness allows credit for more payments previously disqualified for PSLF. So I'm not sure, and I don't want to get political, but under a previous administration, there were very strict requirements of what organizations did count or not count for public student loan forgiveness. There was a higher percentage of individuals who thought they were working at an organization where their payments would count. And there's a lot of articles talking about how the decline rate was really, really high for public service loan forgiveness. Because it wasn't really supporting people in the public sphere, the new administration took a look at, what roles, what public service roles would qualify, and they made some amendments and changes. And that is what, they were referring back to earlier as to you could have applied for public service loan forgiveness previously, and now and been declined, but based upon the amendments that were done under the current administration, those payments now will actually qualify. So it's really important, to kind of go back and look at that. I'm happy that you're doing that petition where you are able to perhaps extend that time period where people could have missed that window to evaluate, did they qualify for public service loan forgiveness? And maybe now's the time to reevaluate that. The next is that under COVID-19, one of the things that happened is people had economic hardships. And this was really an anomalous type of environment where basically no student loan payments were required. And also interest was not accruing, right? So that's something that was much different from other periods of time. One of the things about the federal student loan payment freeze, it expires December 31st. So for those of you that paused on your student loans, took that additional income, was able to pay other debt down, able to use that money to kind of curb the inflation that we're all experiencing in our food and other goods and services, and use that to help, subsidize the rest of your budget. Now's the time to sit and make a plan of how do you incorporate that student loan debt back into your budget. And that's one thing I will say from an economic period that us as financial advisors and others in this profession are really concerned about, is that, for over 2 years, people have not been paying their student loans. And that's been giving their household a break financially. And now that that break is going away, how will that impact consumer spending? How will that impact people's use of credit cards and things of that nature? And one of the things we just talk about is it's really important just to make a plan. It's really important to understand the implications of these payments resuming back in your budget. And then if there is a financial hardship, as I mentioned earlier, that is ongoing, reaching out to your loan provider, requesting a forbearance, giving you a little bit more time to breathe, versus just not making the minimum payments and having it impact your credit adversely. So that's kind of a recap of, what's happening. One thing I did want to mention, I was actually looking again this morning. So many of you probably heard that there are some states, actually, they are, can I say this? Right now, the student loan forgiveness is actually in court. Some states are not really happy about what's happening right now. And that basically it's the legality of student loan forgiveness is now in question. So there has not been a final determination yet. The plan is to continue going and requesting student loan forgiveness. The form is still open and available. You can still hit submit. But what they're doing right now is they're pausing the forgiveness aspect on the back end until the court system can really figure out and look at this most recent appeal and make sure that there's no legality of it. So what I will say is, just because it's in the court right now, I would not let that stop you from filling out the form. The form is very, very easy. It will take you, you don't need to put tax figures in. You don't need to show your line 11 number. You don't need to provide any student loan information. All you need to do is put your name, your address, and an attestation that you meet the income requirements, less than $125,000 if you're single or married filing separate, or $250,000 if you're married or have a head of household status or qualifying widower. Just really signing that attestation that you meet the income limits and that form can be submitted. So I will not let what's happening in court right now deter you. I'll address right now, I've heard a lot of this, there's some misconceptions, is that, will they audit my tax returns more deeply if I apply for student loan forgiveness? No, they're simply just looking at your tax returns to ensure that you meet the income limitations. If you're someone that's already in the income-driven repayment plan before, they already have your information through your income-based repayment plan application, those will be fast-forwarded and expedited because your information is already in the system. That is the plan in terms of how the student loan debt relief is going. There's also a misconception that they're going to send you a check for $10,000 to $20,000. So there's also another aspect that for individuals that just paid off their student loans, right? They just did it. The check that people are referring to is they're refunding you back the money that you paid. So it's not student loan forgiveness. There's a joke about people are going to take the $10,000 and go to the Beyonce Renaissance tour next summer. That's not really how it's going to work. So if you still have loans outstanding, if they're at 10 and 20,000, that'll be forgiven based upon the process. If you're someone that recently paid off your student loans, you meet the income requirements, they're going to go back and calculate how much you paid, basically saying you would have qualified for this forgiveness, and they're sending you a check back. That is really what that process is in the back end. It's not the 10 to 20,000 that we're talking about here. So that is really pretty much the end of my formal remarks. I see quite a few questions in the Q&A, so I will pause there.
Okay, Ms. Elliott, thank you so much. And yes, there are questions. We do encourage our participants to please put your questions in the Q&A so that we can make sure that we are focusing on those questions, and then we check them off as we answer them so we don't leave out any. So Ms. Elliott, thank you. Thank you. Thank you. This is, again, a topic that affects so many of us in our community. And, you know, we want to make sure that we have all the knowledge that we can get today, and then we know how to move forward and research on our own. So we do have some links in the chat, and what I will do before I even get to the questions in the Q&A, because they're building up, I will answer some questions that we got either on Facebook, because we are streaming this Facebook Live, or some questions that we have in the chat. So one of the questions in the chat is, will the federal student loan debt payment go towards your loan interest or principal? So I'm guessing this is what the government is proposing with the $10,000 or $20,000.
Yeah. So my understanding, it will go to the principal. So like once that interest accrues, it's part of the debt. So there really isn't a separation there anymore. Because basically federal student loan debt interest hasn't accrued in over 2 years. Okay. So any interest that's applied to your loan is already embedded in your loan. So it'll be used to pay that outstanding amount of student loan debt that you have.
Okay, thank you. And again, please put it in the Q&A because that's where I'm getting ready to move to answer questions. So I have one more in the chat. If you consolidate federal student loans to private loans such as SoFi, can you still qualify for the student loan forgiveness?
No, so the student loan forgiveness is only for direct federal loans. It does not currently apply to private loans.
Oh, okay. Okay. Next question. Who qualifies for 100% interest subsidy for the new income-driven plan?
I haven't seen a lot of details on that yet. It's based upon the new calculation, so I'm still waiting to figure out the 100% interest, but I do know that, I heard echo, sorry. Okay, can you hear me?
Yes.
Okay, all right. So I do know for those that have who are in public service, and based upon your amount of your income, you can have basically the loan discharged, and that will in essence have 100% loan interest subsidy with it. So a lot of it is income based, and the determination, can you have the 100% interest loan subsidy completed? Okay.
Okay, so I'm moving toward the Q&A. So again, participants, if you have questions, please put them in the Q&A. Okay, so this question is, I consolidated my loans and now have an offer to be forgiven up to $10,000 after 10 years of payment, but I prefer to pay off earlier. What is the best route?
So the question was, I'm sorry, she consolidated her loans. She prefers to pay off earlier.
Well, I'm gonna read it again.
Okay.
I consolidated my loans and now have an offer to be forgiven up to $10,000 after 10 years of payment, but I prefer to pay it off earlier. What's the best route to go?
So basically you don't want to wait until that public student loan forgiveness at the end of 10 years. I would say, what is the desire to pay it off early? If you plan on, if you believe that you will qualify for public student loan forgiveness, You've gotten confirmation perhaps that others in your same employment have gotten their loans forgiven. And perhaps for you, it's just not enough time, right? That you need that 10-year time frame that you need to be able to have it forgiven. It's really a personal preference, right? I would say, as an advisor, as someone who likes investing, I would say perhaps that extra money that you would like to use to pay off your student loans, you could potentially use it in other ways of perhaps allocating it to your retirement account that earns a higher level of appreciation. There are other avenues if you're sure that your loans will be forgiven. So I would say let the loan forgiveness process run its course if you can, and then perhaps look at other areas where you can allocate that money that can help improve your financial foundation as well.
Okay. All right. Thank you.
Mhm.
Okay. Next question. Was there an expectation, or was it expected that payments be made to lenders during the deferment during COVID?
No. So during COVID, payments were paused for federal loans, and some private loans also did provide the ability to pause your student loan payments. Private lenders differentiated. Some paused interest rates, some didn't pause. Some paused interest accruing, some did not pause interest accruing. It was really up to the lender and how they wanted to handle the time period during COVID-19. But if you had a federal loan, a direct loan by the federal government, no payments were due since March of 2020 up until December 31st of 2022, and no interest was accrued. Just to recap, I want to make sure that was clear that for people who continued to make payments on their loan from March of 2020 to December 31st, they paid them off and their loan would have been forgiven. What they're doing is they're repaying back that money. So not all the payments, but only the payments they made up back until March of 2020, they can get back, because they're saying, you know what, your loan would have been forgiven. You wouldn't have made these payments. So we'll just give you the money back. So that's what that back pay is, or back refund check is happening. But there was no requirement to pay loans if they were federal loans during that period.
Okay, thank you. Can you speak to whether new student loans from 2021 will qualify for debt forgiveness?
Yes. So some of the loans will qualify. Actually, I have a list here, but one of the things that I want to make sure that is clear is that it's based upon, so if you have a college student, if they're under the age of 26, right? If there's someone that could have been a dependent on your tax return, their ability to obtain student loan forgiveness is not based upon the student's own income. It's going to be based upon the parent's income. So if you claim that individual on your tax return, it's not like, oh, he made 50,000, right? Like, no, it's going to your tax return because that child was your dependent in 2020 and 2021. And then they're subject to that 125,000 single, or probably head of household at 250, or married filing jointly at 250. So that's one thing to be cognizant of. It's not based upon their income, it's based upon their parents' income as to if they qualify for student loan forgiveness.
Okay, thank you. I do have a comment. Someone is indicating that they have reviewed the site, and it states that they will be accepting applications up through mid-November. Yeah. I'm not sure if that is for the Biden-Harris forgiveness or if that is for the public service loan forgiveness waiver. So if that participant is still on, please update us in the chat. Okay, so I have a question. It is lengthy. And so I'm not sure if you're able to see in the Q&A or not, but I'm going to read it aloud and then I may read it again, okay? All right, so the person says, prior to now, they participated in the public service loan student forgiveness repayment plan. This person may have been on that plan for 6 years. They just returned to school, but before they did, The person's curious if the past payments are going to go toward the 10-year public service forgiveness, or if this person will have to start over after receiving the terminal degree.
One of the things I would ask is making sure that when you were the prior 6 years that you were potentially qualifying for public student loan forgiveness, that you were working there full time. So that's one of the things that people will often misconstrue. It's not about just being there, but it's also about being there from a full-time perspective. Also, one thing too is that if you volunteered for AmeriCorps or other like volunteer full-time positions, that did qualify. So basically what does happen is it's based upon your employer, and if your employer is an approved PSLF, even if you come in and come back out, from my understanding, it does qualify for PSLF.
Okay, thank you. Okay, another question. This person wants to confirm, they need confirmation, about the interest accumulation. Starting January, is it true that as long as we make payments on our loans, we will not accrue interest? Will we only be paying the interest accumulated prior to January 2023?
Well, so interest was paused from March 2020 to December 31st, 2022. So any interest that was accumulated prior to March 2020, it's going to be embedded in your loan. And then starting in January, interest will begin accruing again. So your payments will be based upon interest prior to March of 2020. And then any new interest that starts accumulating in January of 2023. So that's how that calculation will work.
Got you. Okay, got you. Thank you. I have a question about the making the biweekly payment as opposed to the monthly payment. Most have a payment due date. And so if you choose to do the biweekly payment, will one of those payments be after the due date?
So it does take some strategy, right? So you have to make sure that both of your payments are within that window of when the payment is due. So for example, if your payment is due the 30th of each month, you want to make sure that you're making one payment on the 15th and one payment on the 30th. And that you're doing it within that same cycle to make sure that that entire amount is met by that 30th of the month or whatever date your payment is due. So you have to be really thoughtful and strategic about what days you do choose for the biweekly payment, and that you never cross over to another period where that minimum monthly payment was not met.
Okay, got you. Thank you. We do have we have a participant that is thanking you very much. You've been so informative about the student loan debt and new Biden forgiveness program. So thank you. There is a participant. Okay. The question or the comment is speaking about the graduate student loans. In dealing with when we're dealing with is there any distinction with undergrad, grad, or is it just lumping student loan debt in one big, I guess, bank as far as what it's going to forgive?
Yeah. So one of the things is that one of the bigger things is that graduate does qualify as long as it's a federal loan. So if it's an undergraduate, graduate, or a parent plus, it's all under the same umbrella for cancellation. Now, one of the things is that, oh, sorry, I'm looking at the chat. I should look at you, I'm sorry. So one of the things that you want to be cognizant of is if it's a federal loan, it would be eligible under the student loan forgiveness.
Okay. Good. Clarification was provided as to the November. And so the person is saying that on the student loan debt relief website, apply today, but no later than December 31st.
Correct.
So and that's for the Biden-Harris student loan relief. The person says it's easy, it takes about 5 minutes. And so, okay, thank you for that. Thank you very much. Okay. So I'm looking here. Okay. All right, she answered her own question, so we're good with that. Okay, another question, sorry. With forbearance and deferment, those private for the private lenders, they pretty much dictate, is it true that they dictate their forbearance and deferment time? So like the federal government, you can forbear up to 12 months. Do they have a shorter period? Do they just get to make it arbitrary based off of what they want it to be, based on the lender? What does that look like?
It's really based upon lender. I hate to say it. So it's hard to give a universal response for most people. Many of them will offer like longer periods of time. If you say like, I'm in college, if you have a loan and deferment's not an option, they'll give you the forbearance option. If you say like, hey, I'm going to law school and I'll be in law school for 3 years, there is a propensity to give you an extended period of time or a 12-month time because you're back in school. The one that is more lender dependent is when you have like a financial hardship. And they'll say, all right, we'll give you 3 months or 6 months, but if you continue to have this financial hardship, just reach back out to us again. And then you have to proactively reach back out to them again and extend that period of time. So that's the part that can be tricky with lenders, is they may not give you the full 12-month at the initial request, but they would, do it based upon the financial hardship that you expressed in your interaction with the lender.
Okay, I have an additional question. How far back will the time frame go for those who paid their loans off? This person paid their student loans off about 7 years ago. Would they still qualify for the check to be reimbursed?
Yeah, so my understanding is the checks that will be going out, actually I was looking at it this morning, and make sure I read this verbatim. So there's no issues here. I have it in my notes. Okay. The Education Department has offered to return money to people who continue to pay off their debt since the inception of the moratorium in March of 2020. So basically it only goes back to March of 2020 is their look back at payments made. If you paid your loans off before March of 2020, there will be no check provided.
Okay, that's good information. That's good to know. Okay, so we don't have any additional questions in the chat, but and we're going to put up the survey for the participants because we before you log off, we really want you to complete the survey so that we can continue to provide topics, number one, so you can provide feedback on this session, but also we can continue to provide topics that meet your needs. But Ms. Elliott, again, you have provided invaluable information and you just make it so plain. I know a lot of times, and we've had this conversation before, when it comes to money and when it comes to finances and making good financial decisions, sometimes it can be overwhelming or daunting. And it is just so good to have someone who can make it plain. And we truly appreciate it. So I think if you could just sum it up for us in maybe telling people they should consider doing what for their next 2 action steps.
So if you have student loan debt, number one, check your 2020 or your 2021 tax return. Look at line number 11. If you meet those income requirements, please fill the form out. Do not wait to fill the form out. Even though the debt dischargement is paused, they're keeping track, they're going to process them as they're received. So do not delay in completing that form. if you do meet the income-based requirements and you have federal loans that are subject to student loan forgiveness. I would say the second thing is for people who have student loan debt in excess of 10,000 or 20,000 and will need to make continuous payments starting January 1st. I know the past 2 years have been nice. Payments have been due, but I think it's time for, if you do have, additional debt outside that amount, to make a plan to pay that debt. To go back and look of, can you implement the biweekly payments to minimize the amount of interest that you're paying? Look at your employer benefits to see if they offer any student loan debt assistance and can help you in making your payments more quickly. And reviewing your budget to make sure that your budget for 2023 does incorporate making those student loan debt payments. It'll be a surprise for some people, particularly for those who may have private lenders and their interest may have gotten higher. You really want to review your lender communications, your updated payments, and really make a plan. I don't want anyone to be surprised in January looking at the amount of debt or your payments that are needed, and making sure that you can reach out for assistance now if you need help on making your student loan payments on a timely basis.
Okay, thank you.
Mm-hmm.
Thank you so much. We appreciate you. We thank our participants for joining tonight, and we hope that we hope that this is just the tip of the iceberg of the information that you will start to seek as you make eliminating actually your student loan debt part of your financial plan. So again, thank you. We wish you well, and everyone have a great evening.